Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. Beginning, my guest is joining me right now virtually. He's Professor Kelvin Chika Urama. He's the Vice President and Chief Economist at the African Development Bank. Professor Urama, good to see you again. Welcome to the program. How are you?
I'm fine. Good morning, and thank you for having me.
Good morning, Prof, and thank you for joining me this morning. I know you have a busy day, Onga, perhaps you'll be traveling after this, but thank you very much for honoring the invitation. So it's good to see you again, like I mentioned. Let's get started first. The African Development Bank is 60 from 1964. Yes, from 1964 till now. The African Development Bank says it's been driving 6 decades of economic development and transformation in Africa. Before I come to you for your comments, let's just take a quick look at this video. Just take a look at this video and we'll comment on it when we come back.
Thank you.
I'm actually dancing with the African Development Bank here. Professor Ram, I hope you're still there.
Thank you. Yes, I am.
I did see you in that video. Can I see Prof, please? I didn't see you, Prof, in that video. I would have, analyzed your dance steps. I only saw Dr. Akinwumi Adesina, of course, the president of the bank, dancing to, I think, that's Jerusalem, that's Master KG's song. So, Prof, how are you all feeling in the bank about the 60 years, the 60th anniversary of your bank? And what's the bank's analysis really of how it has fared since the meeting in Khartoum, Sudan, 60 years ago in 1964, when 25 African countries came up with a vision of building what you guys call the bank, the African Development Bank?
Yeah, thank
Have
you
you
very
guys
much.
done well in 60 years? Are you patting yourselves at the back?
For sure. As you can see, could see in that video, we were all dancing and really thanking God for what has been 60 years of making a difference in Africa's development. Making a difference in several dimensions, mobilizing capital significantly for infrastructure investments, governance, and development on the continent. And you can bear witness to the significant investments that the bank has done, growing its capital base in multiple times since the time it was established. Now over 300 and something billion US dollars in capitalization. And that is significant. Not only that, the bank has won several prizes and awards for its transparency as a development institution, not only in Africa, but also globally. And we also see a lot of investments that has happened in key areas that are growth drivers for Africa, in agriculture, in energy, in industrialization, and in productive infrastructure, and in many other areas for improving the quality of lives of Africans. Particularly in the past 10 years that I have been in the bank under the leadership of President Akinwumi Adesina, we've also seen quadrupling of investments and growth in the bank's reputation and impact, not only on Africa, but in shaping the global financial architecture as well, in terms of policy dialogue on what is good for Africa, becoming a voice on knowledge and economic governance for the continent. So overall, if you read the report on making a difference, African Development Bank at 60, you will see that there are a plethora of reasons why you saw that dancing, not only by staff of the bank, but by Africa and also the executive directors and board members of the African Development Bank, who has committed significant time, energy, and resources in bringing the continent to where it is now.
Prof, how about those that have also criticized the bank in terms of 60 years of existence and 60 years of Africans still living in poverty? Because I think when my team posted this on social media that you were going to be here, or is it, yes, that you were going to be here, and also when the president posted that video, I was reading comments under the video on X, and people were like, okay, make una well done, 60 years of existence of Africa Development Bank, yet poverty is still in Africa. Um, if we take a look at the African Development Bank and perhaps the Asian Development Bank, for example, you will know that a lot has happened in the continent of Asia, in terms of economic development. But you can't really say so for Africa. 60 years is also a long time. 60 years would have been enough to be able to pull, of course, not everybody out of poverty, but a significant amount of people out of poverty from Africa.
Thank you very much. As you would have noted in the report we are going to be discussing today, structural transformation in a country or in a continent is driven by several factors. It's not only the finance, which the African Development Bank was established to mobilize for countries. It's also the issues around national, regional, and continental governance, the quality of the institutions, the human capital that is available within those countries to be able to drive transformative change. Development does not happen externally. Development always happens organically from within the countries. And a lot of people will complain that there's still poverty on the continent. But what you need to think about is the counterfactual. What would have happened if we didn't have the African Development Bank? What would have happened if we didn't have significant changes that we have seen in terms of economic transformation that has happened on the continent? The challenge we have on the continent is quite often we celebrate the negative. We focus a lot more on the challenges without really counting the big blessings, the big wins that we have had over the time. As you see in that figure that you have projected up there, Africa is now the second fastest growing economy in the world and has been for several decades, thanks to the work that the African Development Bank, many African countries, and Africa's development partners have been doing. Yes, poverty still remains on the continent, but if you look at the GDP growth of the continent, we are growing faster than most other regions of the world, and second only to Asia. And that second is just by a tight margin. If you look at that red line on that figure there, Africa is almost at par with Asia with regard to GDP growth. Yes, but because of the population of the continent, GDP per capita, which is the proportion of gross domestic product that can be allocated to per individual in an economy, is still lower than other regions of the world. That's the graph you see on the right side there, because of the population of the continent. So when you are growing an economy and the population is growing more, you just think about a family that you are growing the number of people that feed from the same pot, and you are growing the pot from which they feed. So the size of the pot must be larger than the number of people that are feeding from that pot for the impact of the growth in the pot to be felt. So the challenge we have on the continent is that we're growing on both sides. We're growing the economy, but we're also growing in terms of population. Both are good things, but we need to come to a stage where the African economies are growing faster than the population growth consecutively for several decades for us to be able to come out of poverty. Some research we have done shows that Africa needs to move its growth from this average of about 3.8% or 4% per annum. We need to move that to above 7% per annum consistently for over 5 decades, over 50 years for that to happen. That is what happened in China. That is what happened in some of these Asian countries that you have referred to, and that is a combination of policies, domestic policies, but also a combination of favorable external conditions that is creating the environment that allows that growth to happen. Another challenge we have on the continent is that while Africa continues to grow, we have 10 of the fastest growing economies in the world currently in Africa, and we have over 15 African countries posting over 5% GDP growth rates annually in the recent decades, especially in this year 2020, 24 that we're discussing. We still see that some of the larger economies in Africa, Nigeria, South Africa, Egypt, and others, are facing significant headwinds because of volatilities in the price of commodities for Africa, for Nigeria, for in the price of oil, because of imported inflation, and things that are creating challenges for the domestic economy to be able to maintain stability and growth over that period that we are thinking about. So the challenge here is not that the bank or African countries are not doing their best. It is that we have a conglomeration of factors that is actually pulling back the growth over time. If you just think
Prof.
about the past few years, COVID-19 removed over 10 decades of progress in poverty reduction successes in Africa. And after that, we have the Russia-Ukraine war, we have the war with Hamas and Israel, and all these global conflicts has implications because of our trading partners, global supply chains being disrupted, and that leads to inflation, it leads to debt, and several things that creates a vicious cycle.
Prof, you're an economist and a renowned one at that. I'm not one. But as a result of doing the show and interacting with people like you over the years for decades now, at least to an extent, I have an experience of, perhaps asking the right questions. You've mentioned why we are not seeing a lot of people being pulled out of poverty, perhaps in the last 60 years that the bank was established. But Prof, you also know that as you've given me the challenges that we have, okay, population is growing even faster than economic growth. I would also tell you in Asia, they have population a lot. Okay, let's take China as an example. You know that what China did to pull out its people out of poverty. China grew by close to perhaps double-digit growth for perhaps about 10 years for it to be able to pull its people out of poverty. That's one. You also did mention that perhaps we need to grow as a continent by 7% for perhaps for the next 50 years. But let me situate it now in Nigeria, for example. Apart from the last 8 or 9 years, Nigeria's economy grew at about 6 to 7% annually. But what we had was jobless growth, as it were. We did not actually also pull many people out of poverty. So the idea that those of you that economists also put out there, oh, we need to grow at 7%, 8%, this and this, I also find it difficult, to agree because history, economic history has also showed me, especially in Nigeria and in Africa, that things that work in other places may not entirely work here. So my question is this. Apart from this, you actually also said internal, that we need to develop internally. Since Africa as a continent, we've seen what has happened in the last few years. You talked about organic growth. Can't we change our growth model to perhaps a bit of engineered to force the growth on us, like even China did? China did a lot of things. They Chinized, if I'm to put it that way, or they localized their development. You understand what I'm saying? They localized their development. And today they are the second largest economy in the world. And China still calls itself a developing, a developing country. I had this argument in Geneva last week with my Chinese friend who is an anchor at CGT, and she was like, oh, China is a developing economy. And I told her, I said, Tian, wait, please don't tell me that China is a developing economy. But that is actually what they call themselves because they still see that there's potential for more growth. So over to you, Prof.
Yeah, thank you very much. I think the main point here is why do we still see poverty while growth is happening? Because even in China, there are still issues around poverty that they are still having to deal with. And that is why, if you really look into a disaggregated analysis of the Chinese economy, you would agree with them that China still remains a developing economy. Just like Africa is, and many other regions that we are discussing here. Now, the challenge that we need to think about is that economies don't grow as islands. The African economies are open to several global shocks that sometimes upends domestic policies. We have imported inflation that is coming from structural challenges in terms of global supply of food and energy. And when we have such structural challenges, the prices of energy and food will go up. And that's why production prices will go up. And that's what creates these inflation challenges that we think about, that we continue to have faced on the continent. Now, countries do their best in order to try and rein in this inflation through monetary policies. But as you said, quite often, such monetary policies may not always have the desired effects because of the external factors that affects the impacts of those monetary policies on the continent. If you think about inflation, for example, in Africa, addressing inflation is not just as simple as it would be in most advanced economies where you use the interest rate
Interest rate
policy
tools, yeah.
to be able to address the inflation. Because in Africa, there are so many complications with regard to supply shocks. There are structural challenges that needs to be dealt with. So many policymakers in Africa are dealing with multiple challenges at the same time. And it's not they are not doing the right things, but because of the multiplicity of the challenges and the interconnectedness of economies, the actions taken in one country alone will not be able to address the issues that they have. Again, it takes time to build the stock of human and infrastructure capital to be able to achieve economies of scale in any economy. It took China several years to do that. It took other regions also several years to do that. The challenges we have been seeing in Africa is that because of the fiscal deficit and current account deficits we have, countries don't have significant amount of the fiscal capacity, the firepower, as it could you may call it, to be able to invest consistently over decades to build this critical mass of human and infrastructure capital that will be able to drive productivity in sectors. And that is why you find that most African growth trajectories goes up and down. Countries struggle, maybe within a decade you achieve high rates of growth, then there's a global shock that happens and upends all the efforts. And we start again. And as you heard me say during the Nigerian Economic Society conference, we keep hearing of Africa rising. And that rising is because we keep going up and down, up and down. And one fundamental thing that you referred to in person is the fact that African countries depend more on commodities. And because this price of these commodities that has little value addition in terms of technological content of our exports is actually very volatile in the market. You were just talking before we started on the price of crude oil. It keeps going up and down, and it makes it difficult for countries to actually to be able to rely on that in terms of planning a sustained structural transformation program that will allow countries to be able to move forward. So the next question you would ask me, knowing you, is what should Africa do? And what should Africa do in this case would be that we really need to refocus significantly on what we have, natural capital. How do we ensure that we translate that natural capital to growth so that we improve the quality of growth in Africa that will increase not only the GDP growth numbers, but also the GDP per capita growth numbers, so that the distribution of wealth is significantly across the population, and then you can increase factor productivity for a critical mass of the people of the continent, and therefore the aggregate growth will go up. So that's the challenge we have, and African countries are already doing a lot in order to do that. To address the issues about imported inflation, we are having significant policies that has been implemented at the continental and regional and also national levels that is now moving towards creating an Africa financial stability mechanism to try and stabilize our responses, our openness to shocks, especially with regard to debt, which is another challenge that the continent continues to have because of the different factors that creates debt overhang on the country, on the continent. So it's not as if countries are not doing enough or that the African Development Bank has not done enough, but just the global economy within which we are working has a problem. And that's another point I need to raise, that the global financial architecture, as currently designed, Africa was not at the table when that financial architecture was designed in the post-World War era in the 1940s. And because of that, the interests of Africa seem not to have been fully represented in that architecture. So there's quite a number of challenges or market failures in the global financial architecture that actually dwarfs the efforts that countries are making, African Development Bank is making, and all the other financial institutions are making to try and grow the economies of the continent. And that is why, under the leadership of President Akinwumi Adesina, we have been pushing and advocating for the reform of that global financial architecture, including the operating frameworks for multilateral financial institutions, the World Bank, the IMF, the African Development Bank, and the rest of that, to make it better fit for purpose, and also to address issues around governance and representation in global platforms so that the interests of the continent are taken into consideration. And then also the risk ratings of the countries in Africa, which often, because of information asymmetry, we suffer a lot of high costs of debt, high cost of capital because of the information asymmetries within our risk rating, the way that global risk rating agencies rate African countries. That all these things are a convolution and a confluence of factors that really makes movement on the continent in terms of growing GDP per capita very challenging.
So, Prof, you've said a lot, and let me see if I'll be able to distill, dissect, and perhaps, get a few things. But you've talked across inflation, public debt, even COVID-19, and all of that. Prof, as an economist and someone that sits, of course, at the bank looking at the different economies in Africa, what do you think is Africa's greatest risk? Or perhaps we're in September now. What is the greatest risk, or what was the greatest risk facing Africa from beginning of the year till now? In 2020, it was like COVID. 2021, the spillover effects were still there. 2022, I think it was Russia and Ukraine, if I'm not mistaken. 2023, Israel, the Middle East tensions and all of that. 2024, what is it actually for Africa? Because there's been spillovers of these external shocks to Africa. That's one. Then the second one is inflation. Inflation in Africa. I don't know what the outlook of the bank is concerning inflation, because many Africans have very impoverished right now, purchasing power eroded as a result of inflation, high inflation, I would say, across Africa. In Nigeria here, we're grappling with 32% inflation with a high cost of living crisis, a high cost of living crisis here in Nigeria. In Ghana, I think about a year ago or two, they struggled with about a 52% inflation rate. Now, I think it's down to about 30%, which is still high. Public debt is there. So I would like you to speak on these two issues, the greatest risk and how you think we can actually even address the issue of inflation.
Okay, thank you very much. Let me start from the one you just mentioned, inflation. Inflation remains a risk for the continent for several reasons, and you've mentioned some of it. The potential impacts of policies that is designed to address inflation having impact on the productivity of the economy itself. So the risk of making sure that fiscal and monetary policy are very well coordinated to ensure that while we're trying to rein in inflation, we're also not going to upend SMEs, small and medium scale enterprises, and then also that we have shock therapies in terms of what is called palliatives to ensure that the vulnerable populations can actually absorb the short-term risks and challenges of addressing inflation and trying to deal with it with classical economic policy tools like interest rates and so on, while looking forward to the benefits that will come from such structural reforms and reform agendas. That is one thing that is a delicate balance that countries will need to really, really look into. Because as I've mentioned before, inflation on the continent is not only domestic. And therefore, classical tools for addressing inflation that is trying to address the domestic issues within the economy alone need to be broader based than we normally used to think about it. For example, food and food price, energy and energy price is a major proportion of inflationary challenges in Nigeria and in many African countries. So we must be very strategic in thinking not only about interest rate hikes to contain inflation, but also about fiscal policies and intervention in the real economy to boost agricultural production so that we can reduce food price inflation over time, but also to look at multiple diversifying the energy sources and improving energy efficiency. There are several tools that needs to be done in these two key areas. So my message will be for countries to identify what are the key internal and external drivers of inflation, and I try to have a coordinated approach to addressing that. That is very, very important. So that's one aspect. And second aspect of addressing inflation is also prudential budgeting and managing government expenditure so that we try as much as possible to reduce the outflows and ensure that we can actually be able to contain the challenges that government spending and could create if it continues unabated within a heightened inflationary policy regime. So that's also one thing that we need to clearly think about. Now, the second one that is a challenge in many African countries is debt and the debt overhang. And that has significant implications as well as we have tried to explain in the report. And there are several tools that we need to be able to use to address that debt. And knowing that debt is not a bad thing, as many times we try to demonize debt. Debt is not a bad thing because debt for growth is a known way of growing economies. But in terms of improving the quality of debt, what we borrow for, how we spend what we borrow, and how we make sure that it's actually being invested in productive infrastructure. That is one other thing that we need to address. But I have to mention, as you show on this graph here, that the spread African countries pay for their sovereign debt is like 3.5 times higher than comparative comparators in other countries in developing and emerging economies, which is one of those aspects of what I say that global financial architecture is misaligned and really needs to be fixed in order to be reformed in order to ensure that Africa's interests is addressed. Africa will be paying this year alone about 74 billion US dollars in debt repayments, interest repayments alone, and that is really very high. So that is creating the challenge that countries are not able to invest in those productive aspects: human capital, health, infrastructure, and other things, because they have to repay, they pay the interest to service their debt and
Okay.
so on. And then the third one, which is fundamental and structural, is climate change. Climate change, especially the physical impacts of climate change, recurrent, events that are, extreme weather events, is creating challenges. You just talked about the dam in
Yes.
Cameroon
Like the
that's
dam.
going overflowing. That can create significant flooding, and that has implications for agricultural productivity. It has implications for infrastructure and so on. So we really need to pay attention to climate change and how to make sure that we are building climate resilient infrastructure and adopt policies to address those changes as well.
Okay.
But with global demand, and fiscal conditions in the economy globally is also another challenge. And the last but not the least is security, which is upending productivity in rural areas in many African countries, but it's also upending supply chains, global supply chains, because of the global conflicts that we're seeing. So there are several of these risks that we need to continue to juggle as we try to build economies on the continent this year and going forward.
Okay, Prof, let me chip this in because we have about 5 minutes. You've talked about the issue of public debt. Why is it that perhaps some African or many African countries, after getting debt relief, they still get back to a debt trap? In Nigeria, we got a debt relief some years ago. Now our public debt is around 121 trillion naira. How is the African Development Bank looking at this? That's one. Then the second question is around the depreciation of our currencies. African economies, we've seen a depreciation of our currencies at least over the last 2 to 3 years, and it seems to be getting worse and worse and worse off. Which we've also seen that because of the depreciation of our currencies, there's an exchange rate pass-through to make inflation higher, because many African countries depend on imported food, on imported goods, so there's that exchange rate pass-through. What can we do to be able to lift our various currencies? And you did talk about at the last at the NES conference, you talked about dollar dominance. What will it take to win Africa from dollar dominance? I know that the BRICS, for example, are muting a currency, that to be able to reduce the supremacy of the dollar. And in fact, in Nigeria, at the time, our central bank signed an agreement with China to be able to exchange the yuan with naira if you for trade purposes. So how would we reduce dollar dominance in Africa? Perhaps that would also lift our currencies. And the issue of debt. What is it that we have with debt? Of course, you've talked about debt for economic development. Everybody agrees that if you borrow, but borrow for productive things.
Thank you very much. That's a number of things that could take days to discuss. Let me try and address a few of them. Number one, why is it that Africa continues to go back into debt challenges even after getting debt relief? I think the reasons are a bit obvious. Number one, there is no substitute for stable, sound macroeconomic policy environment. So African countries are still building the economic policy environment that will be able to stabilize the economies and help the countries to be able to address their fiscal challenges domestically. The second one is what you have mentioned, the dollar dominance of Africa's public debt. Over 70% of Africa's public debt are dollar denominated. This simply means that policies made by the Fed in the United States has direct implications for Africa. And the second part of it is that Africa's debt has continued to change in its structure. Before, we had more of the Paris Club group that is giving more concessional, low interest, longer term debt to the continent. But because of many African countries graduating into the middle income category, many African countries are now losing access to such sources of financing and are moving back into the open market where private creditors dominate now in Africa's debt, rising now to about 49%. By the end of 2024, it might reach 54% of commercial loans. And these are loans that are shorter term, sometimes more opaque, higher interest rate, and that means that the refinancing risks increase. And again, that is why the African Development Bank is working on the Africa Financial Stability Mechanism with the African Union at the request of the African Heads of State Summit in 2022 to try and address this challenge. Then the other issue why the countries continue to go back into that is because you have fiscal needs and the growing need for fiscal response, like something like COVID-19, when it happens, you just have to address it. So, and countries have to grapple to look for where to get the resources, and then they go ahead and start and continue to try to borrow. But the issue about dollar dominance that you raise is fundamental. Number one, the Bretton Woods institutions have that latent inertia to change what was agreed and set up in the 1944 when it was set up. As I've already mentioned, there are several challenges in there, which means that the cost of debt for Africa is higher than for many other regions of the world. The refinancing risks is higher than for many other regions of the world. And also the risk ratings for African countries is a bit biased. And that is creating challenges for Africa. So, but to address dollar dominance, we need to increase and stabilize our economies.
Okay.
We need good and sound macroeconomic policy framework. We need to trade more in local currencies. And there are platforms and policies that are already created
Okay.
by the African Union,
Yeah.
like ACFTA,
And
to
the
enable that.
PAPS, yes, and the PAPS policy, the Pan-African payment system. I know I
Yes.
can go on with you for the next 2 hours or 5 hours, and we will debate on a lot of economic issues, but I want to say thank you very much, Prof, for honoring this invitation today. I look forward to interviewing you again, perhaps next year, because then I'll be talking about Africa in 2025, so I'll see you soon. So have a safe trip to Onga, and thank you very much for joining me. Thank you.
Thank you so much for having me.
Thank you.
Bye.
All right, I've been speaking with Professor Kelvin Chika Urama, who is the Vice President and Chief Economist at the African Development Bank, and we'll be looking at Africa in 2024. Of course, you can get this interview again on our YouTube channel, Moneyline with Nancy TV. So that's the much you can take on today's edition of the program. Thank you for your company as always. Be the best you can be and be the change that you want to see. I am Nancy Naji. Another Nancy is coming up. But you all know her as Oyedi Aorum. She's my namesake, but she doesn't bear Nancy on air. She'll be coming on with AIT report, and that's up next. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to the YouTube channel, drop your comments as well as like, and most of all, share our content. Bye.